Bismillahirrahmanirrahim. In the continuation of the previous video, the next factor which can affect on the dividend policy is the external factors. Among the external factors, the first one is of course inflation. As much as rate of inflation is more in the market, the possibility for paying dividend is less. As much as rate of inflation is less, the possibility for payment of dividend is more. Why this is so? Because if inflation is more in the market, definitely the purchasing power of money decrease. If the purchasing power of money decrease, so the company should maintain a huge amount of cash in order to be able to pay for the future expenses or purchase goods and so on, right? So that is why if inflation increase, the business should maintain huge money or extra fund in the business. But on the other side, if the inflation is less or purchasing power of money is more, so a small amount of money might be able or might be sufficient to manage the day-to-day expenses of the business. So this is called inflation factors. Of course, this is external factors. More inflation, less dividend. Less inflation, more dividend, right? The next factor, legal requirements. What do you mean by legal requirement? Legal requirement, basically these are basically called by the government or by law. So we have to implement it in the business. Dividend can only be paid out of profit and not out of the capital. Point number one, if you want to pay dividends, so there should be profit available in the business. So dividend should not be paid out of capital. Point number one. The company can declare and pay dividend out of past year's profits, right? It should be out of past year profit, not basically out of this year. What do you mean by this one? Past year profit, why it is called past year profit? Because we decide at the end of the year, right? Up to 31st of December, for example, we make the income statements of the company. Let us say, for example, this is 2019, right? And 31st December 2019, we make the income statements. Let us say, for example, in 1st January 2020, we decide about the dividend. So that is why it became past year, right? After passing 1 day or 2 days, it became past year, right? So that is why when we say it should be out of the profit of the past year, it means out of 2019. Profit of 2019 is paid as a dividend in 2020. Profit of 2020 will be paid in 2021. That is why it is 1 year gap. Next point number C. At least 10% of percentage of profit must be transferred to reserve. Out of the total amount of profit, at least 10% of the profit should be maintained with the reserve. It means that the whole amount of profit never should be paid as a dividend, as per the law. At least 10% of profit should be maintained in the business, maybe for the emergency cases, maybe for the expansion of the business and so on. This is compulsory as per the law. So it means even you made, for example, 1 lakh profit, the maximum amount of profit that you can distribute is 90,000. So 10,000 should be maintained in the business. Dividend is payable in cash. Usually we pay dividend in cash, but sometimes it can be paid in the form of, we can say, shares, bonds as well. That is the second factor. Factor number 3 is corporate tax. Heavy rate of taxation reduce the residual profit. Definitely, as much as the amount of tax is more, the residual profit for the shareholder will decrease. If the residual profit decrease, the chance of dividend also decrease. As much as the rate of tax is less, residual profit is more, so the chance of dividend is more. Let us say, for example, business, for example, made, we can say, let us say, for example, 1 lakh profit. How much profit? 1 lakh profit. Let us say, for example, corporation tax is 50%. If corporation tax is 50%, 50,000 of this one will be paid as tax. Remaining 50,000 will be available for the shareholders, right? So in this case, it is a small amount of money, so the chance of dividend might be decreased. Let us say on the other case, let us say, for example, corporation tax is only 10%. So out of 1 lakh, we can say 10% will be paid as tax. Remaining 90,000 can be paid as a dividend among the shareholders. So tax is less, so the possibility for paying dividend is more. Why? Because the residual value, this is called residual value. Remaining amount after deduction of tax is called residual value. If corporation tax is more, residual value is less. So chance of dividend is also less. If tax is less, residual value is more, so chance of dividend is also more. This is the third factor. Factor number 3, general states of economy, certain or uncertain. If economy is certain, so the chance of paying dividend is more, or dividend can be stable. If economic condition is uncertain, so definitely dividend is also uncertain. Why? Because the performance of the business depends on the performance of economy. If economy is uncertain, dividend is also uncertain. If economy is certain, so the profit of the company also might be certain. And the last one is basically condition in the capital market. What is the condition in the capital market? Whether the company can easily sell shares in the market or not. If the company can easily sell shares in the market, on that case, the company may divide the available profit as a dividend among the shareholders. If it is not possible to easily issue share in the market or bonds in the market, it is very difficult, it is time consuming, the cost is more, or so on, right? On that case, the company may not decide to divide the available amount of profit as a dividend among the shareholders, and they may decide to retain this one for the future requirement. Why this is so? Because if it is not easy to raise fund from the market, so why we should distribute the available fund? If it, on the other side, if it is easy to raise fund from the market, so we may distribute the available fund to the shareholders. So these are the external factors which can affect on the dividend policy of the business.